contribution from non-South markets have crossed 50% in total revenues for this quarter. Gross margins continue to improve with the benefit of softening commodity prices and various pricing actions and cost effectiveness initiatives flowing through. We have reported a gross margin of 36.3% in this quarter, an improvement of 380 basis points YOY. This is a combination of pricing action, softening input prices, and better product mix. The recovery in margin is now largely complete. We expect to continue the margin improvement through benefits of manufacturing, premiumization, and scale benefits from the consumer durable segment. Of late, we are also seeing some firming up of commodity prices and will be taking pricing actions wherever necessary to preserve margins. Effective management of working capital has enabled us to deliver robust cash flows. We have repaid 1/4 of the loans raised for Sunflame acquisition this April. Another 1/4 will be repaid at the end of July, and we are on track to repay this loan as per plan. It has been a good start to the year, and we are optimistic of delivering good performance in the coming quarters as well. With that, I conclude my comments. I would like to thank Natasha and the team at Nirmal Bang for hosting this call, and would like to request the moderator to open the floor for Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Natasha Jain from Nirmal Bang Institutional Equities. Please go ahead.
Thank you. Firstly, congratulations on a good set of numbers. My first question is on the consumer durables segment. Firstly, can you call out the growth in fans particularly, and if there was any meaningful price hike? And if there was a price hike, can you please break it between commodity cost pass-through versus an organic price hike?
Okay. First of all, we don't give out product-wise numbers for various reasons. But we can say that the fans category has done reasonably well. Regarding price hikes, I'll ask Ram to comment. Ram?
Yeah, sure, I will. See, on price hikes, I think price hikes have been taken and they are also ongoing because there has been some subsequent increase in prices of copper and aluminum. So price hikes are ongoing, including we wish to land some price hikes this month if it is possible. So it's ongoing. We had improved our margins, through the realization of input cost benefits towards the last quarter of last year, and we had taken some price increase. I think it was about 2% in quarter 4 of last year. We have also taken 2% in quarter 1 of this year. Yeah. But I think there have been sharper increases in copper and aluminum prices. It may warrant some more corrections here. And depending on the market situation, we will, and competitive situation, we will progressively go ahead. I think most of these increases, I think the increase that we had taken in March quarter was to, what I would say, compensate for absence of price transmission the previous year. But subsequent increases have been responding to input cost increases.
And one more thing, fans remains an extremely competitive category. We have a very, very aggressive market leader, and we have a startup who's also very aggressive. So most of the price hikes are in relation with increasing commodity prices. So I wouldn't say that there is any organic price hikes. Most of them have been to offset increases in commodity prices.
Understood, sir. That's very clear. So my next question is on the electronic side. Now, while we are on a consistent upward trajectory in terms of EBIT margin improvement, are we where we were broadly targeting to be, or is there still a scope of improvement? And on a related note, sir, gross margin improvement has also happened because of cost reduction initiatives, specifically in the electronic segment. Given that second and third quarter are now going to be comparatively leaner for us, what kind of an overall gross margin also can we expect in FY25?
So one thing is regarding gross margins, there is also element of mix. For example, in the first quarter, the summer-based products have done extremely well, much more than and wires, which is almost 30% of our revenues, has grown only by smaller percentage. So there is some effect of product mix which will change in the next few quarters. But largely, when we look at on a normalized level also, I think we're largely okay with gross margin. But I think as Ram pointed out, there has been still some increases in aluminium and crude derivatives and all that. Copper went up, but it also did come down a little bit in June. So in that sense, there may be some more increases that may be required.
Understood, sir. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Rahul Agarwal from Ikigai Asset Management. Please go ahead.
Yeah, hi. Good afternoon, and thank you for the opportunity. Firstly, we wanted to understand what really drove ECD as well as electronic margins. So basically, I understand that input pricing was weak and the summer was strong, and hence, is it more to do with operating leverage here that a 20% EBIT margin for electronics and a 5% ECD is more seasonal and one-off, and hence it might obviously taper down going into the following year? Is that correct?
See, if you look at the previous year also, the electronics margin was around 18%. So yes, so you can attribute that maybe 1 or 2% due to operating leverage. But electronics margins are always on the higher side, comparing with the other segments. In the case of consumer durables, our margins used to be 5 to 6%, and it had crashed with all the increases in prices and the lack of further increases companies were able to do towards the market for various reasons. There were competitive pressures. The quantum of increases were probably unheard of in the earlier years. So there was some resistance from trade and consumers and all that. So now I think we are largely back. I think in the case of consumer durables, we probably will see a little more. Probably should see a little more improvement in margin, and after that we'll go forward. But I think this is sustainable. There may be there is an impact of operating leverage, but it's probably 1 or 2%.
Okay, get it. Secondly, on the working capital, broadly it is maintained at 50 days of sales. But I wanted to understand what is driving the receivable days coming sharply down to 35, and what is driving the creditors increase to 75 days. What are the reasons here?
Okay, yeah. Sudarshan, regarding the working capital.
Okay, so debtors have come down, are lower than normative levels because it was a strong season, so customers pay on time. Otherwise, similarly, even on the payables side, even May and June both were big months, so therefore it's a point-in-time measure, and the volume of buying that was done in May and June is higher than usual.
So where should we see these numbers back, in terms of, let's say, if we see a March balance sheet at 25, where should it sustain?
We should work on the normative levels of about 60-62 days. That's our standard. Currently, it's a bit on the lower side because of the factors I mentioned.
Perfect. And lastly, where are we on the factory capex? If you could just update us across, the manufacturing plants, what is the status update? That will be helpful. Thank you.
Factory capex, except for one project, which is the fans plant, other ones are complete.
And when does the fan plant get complete?
That building has just started.
Maybe 18 months?
Yeah, maybe 18 months.
18 months.
Okay, so we should work with like 120 crores of capex for this year and next year. Is that fair enough?
Yeah, that's fine. 100 to 120 is okay.
100 to 120 crores of capex here. Because see, what will happen is, as we get into next year, certain other, so there is also investments in molds and dies that are going on. So and they are also going to come up. So there will be a normative capex of around 100 crores, 120 crores for the next 2 years also.
Perfect. Thank you so much for answering my questions. All the best and congratulations for a good quarter.
Thank you.
Thank you. The next question is from the line of Rami Swaminathan from Avendus Spark. Please go ahead.
Hi sir, thanks for taking my question and congrats on a good set of numbers. My first question is with respect to the stabilizer business. I know that this quarter would have been a fabulous growth because of the strong traction in air conditioning sales. But say to think over a slightly more normalized manner and over a longer time period like 2-3 years period, what kind of growth rate that we should think of for this particular subsegment, given the fact that AC sales might still end up doing well because of the improved penetration level, etc. In the presentation, we had mentioned that the industry would be growing at single digits. Can it surprise positively by growing at a much higher number?
See, I think for stabilizers, I think we are expecting, if you look at a very, very long term, that is about 10 years of CAGR, it is somewhere around 8 to 9%. And that should be the growth that, we also will be working with. But there are years when, it goes up substantially higher because of, the kind of weather we had. So we have to also understand that we may not get this kind of weather every year. There are years where rains do, kind of happen a lot within summer, and then summer does not really take off. So this year was, it was good on all the fronts. It was also good on all the geographies as well. So sometimes you have a very warm summer in south, but entire non-south gets washed out. Sometimes you have very warm summer and, non-south, South India gets washed out. So these kind of things happen. This is one of the rare years where we have had. So 8 to 9% is been our very, very long-term CAGR, and that I think is the right number to work with.
Understood, sir. And what is driving growth in the digital UPS product, sir? So, what are the factors of growth that is driving that particular product?
See, digital UPS also has, digital UPS is also dependent on summer, because what happens is, as the summer gets really warm, power cuts tend to start to begin, and, usage of inverters go up, especially in, tier 2 and rural areas. So that has been one of the main drivers. But apart from that, we also have a new division which was started 2-3 years back, which is solar rooftop solution for residential. So that is also driving huge growth within the inverter and battery segment.
Okay, and the solar rooftop, what percentage of the overall electronics mix will be as a contributor, and how fast is it growing? Is it like a high teen kind of growth segment?
No, solar rooftop is growing very fast. It's very small as of now, and we don't give out product-wise numbers.
Understood, sir. And my second question is, say, the real estate linked products like wires, switches, switchgears, etc. Are you seeing any signs of major uptick in terms of real estate led demand, which can actually kind of improve the growth from, say, single digit or high single digit to a much higher number?
So Vguard's, wire and, electrical business is largely retail, which means that almost 90 to 95% of the sales come from the trade, that is retail shops. We don't have a big business supplying to, very large builders and infrastructure players and so on and so forth. So for us, this is more normal sales. But yes, our partners do supply to, medium-sized builders and all that. So we have to understand that there is a lot of real estate activity happening, but what we are seeing is that it's probably getting more formalized. So earlier also this was it was going on, but, it was probably split among a lot more, smaller and larger number of builders, which is now, now what we're seeing is, a few builders are enjoying, majority of the sales. So I think for us, and that since when we will see our peers also, we are not seeing that much of an improvement, in that sense. But the retail sale is more stable. And for example, when the interest rates were low, we did see some uptick, because when interest rates are low, people tend to make investments in, real estate and stuff like that. So yeah, we cannot say that, there has been a huge tailwind for us specifically. But companies which are focusing on projects will probably get some of that. And one of the reasons we don't do projects is the margins in projects are 10 to 15% lower in a product category with very small gross margin. So it easily becomes it does not make sense for us to supply to projects.
Understood, sir. And my last question is...
I'm sorry to interrupt, Mr. Ravi, sir. Could you please fall back in the question queue for further questions?
Sure.
Okay, thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference room, please limit your questions to 2 per participant. The next participant is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, good afternoon, Mithun, Ram, Sudarshan. My first question is on other expenses, which saw a fairly sharp increase in first quarter. I understand that A&P is one part of it, but even if you strip off A&P, it appears that other expenses have actually risen quite sharply. Is there any one-off in this quarter, or if there's nothing, then what is this on account of?
Yeah. I'll ask Sudarshan to take this.
So there are a few different parts to it. One is A&P, as you mentioned, so that's one factor. Certain factory-related costs also appear in other expenses, and compared to 1 year ago, manufacturing expenses have gone up. There are some one-offs, yes, because there were some releases in the previous year. So that also contributed. Nothing unusual really. There's a big jump in freight and warranty, which is for this quarter because for electronics and the durables, which were the high growth categories, these tend to be higher than average. Largely that.
Understood. So you're saying in the preceding quarters there were some releases of provisions, and in this quarter, given that there are no releases, optically we are kind of seeing a sharp jump.
Yeah, and this quarter also the mix was like that, so freight and warranty is higher than
warranty. Understood. And how should we kind of then think about it going forward? Freight and warranties is something that we can normalize a bit depending on mix. But rest everything appears to be in a similar kind of a range?
Yeah, it's better to look at it as a 12-month number, not by quarter. So you see how our costs progress in the previous year, no? It will take the same time.
Sure. Because if I just look at last year, the quarterly average works out to be closer to 200 odd crores, while this quarter we have spent almost like 260 crores. So the jump was
better to look at it as a percentage of turnover, what the other expenses are for FY24.
See, some of the expenditures sitting in other expenses are also volume related. Like as you sell more transportation, more warranty provisioning. As we manufacture more in our own factories, more outsourced manpower costs, all these are sitting in other expenditures.
Sure. My second question was on the growth that you've seen in electronics segment. While I understand that you don't break up the segments, just wanted to understand, is it getting largely driven by stabilizers, or would digital UPS would have also seen a big improvement? And a related question to that, we used to struggle with profitability on the digital UPS side. Have we seen a significant improvement around that?
No, I think both have grown well. Like I mentioned, both stabilizers has grown well, and inverter battery has grown well. So it's not like it is one that is driving. Both of them have grown well. In terms of profit, you asked about profitability of digital UPS?
Yeah.
Okay, Ram, you want to take this regarding?
Yeah. I think profitability has significantly. Digital UPS has two components: inverters and batteries. Inverter gross margin and profitability has significantly improved over time. With the investment that we made in manufacturing and having moved inverter manufacturing in house. What I would say, the battery margins, of course, continue to be under pressure. We have already taken action there in terms of setting up our own facility I think the benefits from that probably we should be visible towards later part of the year or maybe next year to be more precise, right? So that to give you a picture on inverter battery.
Perfect. That's helpful, sir. Thank you so much.
Thank you. The next question is from the line of Hardik Rawat from IIFL Securities. Please go ahead.
Thanks for the opportunity and congratulations on a strong set of numbers. You mentioned in your earlier remarks that largely the price increases that you've taken in your fans portfolio was to transfer the increase in commodity prices. Would that be correct?
Yeah, that would be correct. Like, see, pre 2020, we had a gross margin structure for fans, and it was completely destroyed after the Russia-Ukraine war and significant increases in aluminium and lack of increases done by the industry. There are two reasons. One is hyper competitiveness. Second is the kind of increases we had to do. It was not possible to do it in one shot. So the industry took 2-3 years to actually do this over time. And then, of course, the prices also cooled off a little bit in between. So yeah, it's largely to accommodate the RM increases.
So the price, there was a bit of pressure on the input prices as a result of change in the regulatory.
Yeah, that also is there. Yes, correct. So I think there were two shocks. One was the shock given by the Russia-Ukraine war. The second shock was given by BEE, which meant that there was almost 7 to 10% price increases in the entry-level products and maybe 5% increase in the premium-level products. So this also largely meant that, if you wanted to buy a branded product, it was getting too expensive for, especially for a value-conscious consumer.
Got it. So could you please share with us the quantum of price increases you've taken in the category?
Oh, you're talking about from 2021? That will...
No, not 2021. This quarter and in the last 3 months.
So I think, as Ram mentioned earlier, we have taken around 2% in Q4 and another 2% in Q1.
Okay. That helps. And lastly, with regards to the debt repayment that you mentioned, 1/4 by July, could you please repeat that, the debt repayment for the Sunflame, the loan that you taken for the Sunflame acquisition?
Yeah. Sudarshan, you want to take this regarding?
Yeah. So we in April we repaid 1/4 of the term loan we had taken, and it's about 70 crores we repaid, and a similar amount will get repaid by end of this month. So.
And for the entire year, FY25, we should expect the entire loan to be repaid, or?
Yeah, that's what we are aiming to. Either by end of this year or by end of Q1 next year, we should have paid.
All right, got it. Thank you so much. I'll get back in the queue.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to understand the stabilizers and UPS market. So is the market growth itself is so strong, or have we gained the market share? And with improving quality as well as quantity both for electricity in India, how do we model these? Because these are considered to be sunset categories in India. So, but we still see Vguard continues to do extremely well in both the categories, quarter after quarter. So, how should we see from the, let's say, growth rate in medium term for both the categories? And again, where is the usage? Means for air conditioner is one which I can understand, but apart from that, is what are the other uses where these products are used? And if you can elaborate more on whether these products are getting used in urban markets, rural markets. Essentially, what is the TAM for these products? Yeah.
I'll make a couple of comments and then I'll pass it on to Ram. I think, in 2008, it is almost 16 years back, when we went for an IPO, all the analysts told me that you will go out of business in 3 years. and now it's been 14 years or 16 years, and we are still growing. So I don't have an answer for this. I can give you the same answer what I told them, that the mess in the power distribution system in India is very, very large. So they're sitting in Bombay and Delhi. You cannot assume that the entire country will have privatized clean power. So I think it's going to be very difficult, because power is a state subject. There is politics involved. There is a union of the state electricity boards involved. There's all kinds of stuff happening. So it's going to be very difficult to privatize power for the entire country. So what we are expecting is the larger cities will get privatized first, and then it will move on. But even there, I think after a point, the central government has not been able to really push for privatization of power, barring the big metros in the country. This is my answer. This is my comment. And Ram, you want to take the rest of the question?
I think what we have observed is stabilizer usage continues to grow. Yeah. And as also inverter battery. Yeah. Probably. Can you hear me now?
Yeah. Now it's fine, sir.
Yeah. I'm saying as also inverter battery. I think what also happens is while the power situation improves, it is not necessarily 100%, and there are interruptions. Maybe the length of interruption is getting shorter. Yeah. But it is there, and the people want to have reliable power, at home. So they want to have an alternate means so that they can continue with life uninterrupted, right? Even in large metro cities, particularly in peak summers like this, even in central Delhi, sometimes the power is going off because the load is very high. So load shedding continues to happen in larger cities also. So, but this is what we are observing, and this is why the category is going up. I think for inverter battery as a category, right? I think the rooftop is also developing as a segment, and that is fast growing, with incentive and support from government. I think that that's an area also which is going to be a significant driver of growth for that segment. Stabilizer, yes, as Mithun already said, we will have a good year or a bad year. Once in 4 years, we've always witnessed a very strong summer, and we find then that on a CAGR basis we end up at a long-term growth when we look at a 4 to 5 year average, which is no different from what it was 5 to 10 years back. So we still continue to believe that 8 to 9% growth, long-term growth will come on a 4 or 5 year cycle. Maybe some years it will be like 6-7%, and some years it will be like 12-13%, 11-12%. Yeah.
Okay. Sure, sir. Understood. And just last question, in terms of kitchen appliances as well as Sunflame, the kitchen appliances under Vguard brand itself. So I guess overall this portfolio is the restructuring largely over, and should we see revival in growth rates, let's say from H2 onwards, or do you think that some amount of restructuring of the portfolio as well as the slowdown in the market may continue for some more period of time? Yeah, that's it from my side. Thanks for the questions.
Yeah, Ram, you want to take this?
Yeah. So I think you must have seen some results have already started to come out in the kitchen space, right? So I think the kitchen demand continues to be under stress, and it's been now I think almost 7 quarters that we are continuously witnessing a stress in this segment. Yeah. So I think that's the first observation. At our end on the Vguard side, we had invested in setting up our own manufacturing facility. The main challenge with Vguard was to improve the competitiveness of the Vguard offering. And to that end, we had set up a facility in Vapi. The facility has come up, and it is still maturing. And I think by October or November, I think we should start to get output at in line with what we need, so that we are able to derive 100% of output from that factory. Yeah? I think once we have our own manufacturing facility, that also besides supply competitiveness, it is also giving us a lot of flexibility to improve, our offerings in the market, right, in terms of the competitive value proposition. So I think this is fundamentally going to be the main piece that is going to drive our business. And towards that end, we are already seeing traction in some of the categories like e-commerce, where, we, in anticipation of what I would say, the manufacturing facility coming up, right, we have, tried to be competitive with our offerings. So I think, we are seeing, good and encouraging traction. So I do believe that, with the facility in full stream by around November or December, and with some newer launches that are coming, I think the Vguard kitchen business should start to do well. Yeah. Regarding the Sunflame business, no, I think, we, it was in Q1 last year that, progressively, we could assemble our team, right, to manage Sunflame. Although Q4 was when we did the transaction, but Q1 was when actually we could put the management team on board in Sunflame. I think we are now the team is about 3 quarters into the company. I think they have settled down well. They have a clear idea of, how to play and how to win. Yeah. There is still work happening in terms of developing our long-term strategy for Sunflame. And that's going to take another, 3 to 6 months, right? I think the GT markets are doing better for Sunflame compared to organized retail, where Sunflame is looking to leverage the Vguard business systems. This process is taking a bit of time, but I think, for example, e-commerce and even organized trade, I think from the coming quarter, I think our systems should be able to better support the requirement of Sunflame. Yeah. So I think that's broadly to give you an idea on Sunflame. I think, the fundamentals are strong and positive. Margins are intact. Yeah. Growth is a challenge for the industry and for Sunflame, and the growth levers are, yet to get pressed, right? And that's why you're not seeing the results coming in, because there is preparatory work which has been happening at our end to facilitate, the scale-up of Sunflame business, right, through the, leveraging the Vguard infrastructure and business system.
Okay, sure, sir. Very helpful. Many thanks.
Thank you.
Thank you. The next question is from the line of Achal Lohade from Nuvama. Please go ahead.
Yeah, good evening, gentlemen. Thank you for the opportunity. Congratulations for the great set of numbers. Sir, yeah, just wanted to clarify. You said the summer season was good, but ex of summer season, would you be able to quantify, if the growth was in single digit, double digit? Because I think wires you said very slow growth, and so is kitchen you said things are under pressure. So if you could just clarify non-summer product, how the momentum was in fourth quarter and how it is playing out in first quarter.
So actually, I think it's slightly difficult to do that, because yes, definitely summer. So I think if you look at Q4 and Q1, we definitely got a few percentage points boost in sales because of summer. I'm very sure about that. So let's see. I think it's going to be very difficult to say that if summer was not good, what would have been. So I think the way you have to look at it is like this. So if you look at last 4 years, we have been struggling in the electronics category. Our CAGR was very low. Stabilizer was not, the growth rates were in low single digits. And now it has caught up to the long-term CAGR of 8 to 9% or 10%. So I think one has to look at it like that rather than saying that if extra summer what would have been the growth. One more thing to notice is a lot of our channel which sells consumer durables, especially kitchen, is the same channel, the same distributor and same retailers which sell stabilizers and air conditioners. So when you have this kind of a summer, the working capital deployment of retailers and distributors will move to the summer categories, and the others will get cited, and that's been a phenomenon that we see every time. So that is also there, as an added reason for some of the slowness in the non-summer categories.
Right. Sorry, maybe I wasn't that clear. In terms of the categories which are not summer driven, like wires, kitchen appliances, etc., if the growth was, weak, or are you seeing an improvement on that count? Yeah.
Mithun, can I take that?
Yeah.
So I think, wire business, responds to copper. Okay. So if copper prices goes up or goes down, it influences sentiment for wire purchase, and that will influence the sales of wire because they stock up or stock down. So if you take out the wire and if you take out summer categories, we are really looking at about some 20-25% of our revenue, and a large portion of that is water heater. Okay. Because the switches and switchgear, they're fine. I think we have double-digit growth. We don't have an issue there. Our penetration is low. These are growing categories, and they are doing well. Then the other part there is really water heater. Water heater, we'll see. Summer. The winter is to start, and we will get a better picture because whatever happens with water heater, pre-season, it's basically trade upstocking. I think with water heater, the growth has been lower than typically what we would expect for reasons that we can talk about, because the entire working capital of trade partners is focused on summer categories, whether it is AC, whether it is air cooler, because these categories have seen abnormal growth, right? 40, 50%, 70% kind of growth, and they had to purchase these, stock this, and sell this, right? So they have really focused their working capital there. I think a clear picture on water heater will be visible, in the upcoming 4-5 months, right? I think last year was a challenging year for water heater as weather has not supported the category. So we do hope that, consequently, the current year should be favorable as far as water heater is concerned. Kitchen, I think kitchen is an industry-wide problem. For us, our indexation to kitchen for at least the Vguard kitchen business is very small, although Vguard and Sunflame is strong. I think, we had, as far as Sunflame is concerned, I think broadly, our performance is closer to plan. I think, as our business systems and practices are traveling to Sunflame, there are some challenges in terms of timing of accounting and all of those things. And therefore, although broadly the performance of Sunflame is close to the annual plan, what is reflecting as sales may be a little lower. We had forecasted that our Q1 will be lower in February itself when we had made the forecast for this year. But I think we are getting into festive season. Q2 and Q3 are the strongest quarter for kitchen. Given that kitchen as a category has been under stress for now almost 6 to 7 quarters, we are hoping that the festive season will really see some sales uplift. But yeah, that's the part which is a bit uncertain as we speak, right, for us and for the industry.
Understood. And just one more question with respect to rooftop solar.
Sorry to interrupt, sir. Could you please fall back in the question queue for further questions?
All right. Thank you.
Thank you. The next question is from the line of Kawal from Summer Wealth. Please go ahead. Hello, Mr. Kawal, your line has been unmuted. Please go ahead with your question. Hello, Mr. Kawal, your line has been unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, ma'am.
Okay. So my question is, could you provide any guidance on expected top line and margin improvement?
You're asking about expected top line and expected margin?
Yes, sir.
So we don't give a guidance as such, but we always said that we should grow around 13 to 15%, in revenues. And margins, I think we've largely come back. I think we should hover around between 9 to 10% EBITDA margins for the year.
Okay, sir. So my next question is, are you planning to expand in a new segment or any product category as of now?
I think, we do look at new categories, but, we are not ready to talk about it publicly.
Oh, okay, sir. Thank you.
Thank you. The next question is from the line of Priyanka Chetta from Valum Capital. Please go ahead.
Hi, this is Priyank Chetta from Valum. So my question is on the rationale for you to keep the two kitchen businesses in a separate entity, one kitchen appliance business in Vguard, another one in Sunflame. And when you are investing further into the kitchen appliance in Vguard, while Sunflame is operating at 50% utilization. So how do we see these two businesses under a same parent roof operating in a two different companies?
Okay, got it. Ram, you want to take this?
Yeah. I think two things. I think firstly, when we set up manufacturing capacity in Vapi, okay, this project had commenced even before the Sunflame transaction could be firmed up, right? And the transaction process is always uncertain, and after waiting for a long time, we could wait no more, and so we decided to go ahead and make the investment in the interest of growing our kitchen business. This is the first part. Secondly, the 65-70% of the output of Vapi plant is basically going to be towards mixer grinder, for which the capacity is not existing in Sunflame. So I think this factory should be able to produce. Will be producing a mixer grinder for Vguard, and should in the future, right, also be able to support the mixer grinder and the food processor requirement of Sunflame. So I think that's as far as our investment separately in these two places are concerned, right? The Sunflame plant, has been operating, in festival period at least, close to full capacity utilization. Recently, we have reorganized the manufacturing layout and the manufacturing system to increase the capacity in Sunflame factory to support the future growth. Yeah? So that's on the manufacturing side. On the strategy side, I think we are going to retain both the businesses. Today, the Vguard kitchen portfolio is approximately 200 odd crores annually, maybe a bit more this year. And Sunflame is, of course, expected to do about 350 crores, right? So 325 to 350 crores. Yeah? So I think the businesses are significant. We are in the course of doing we are engaged in a consulting engagement to deliver a long-term strategy for the Vguard play in the kitchen business, right? And how the two brands will coexist and how they will operate, right? Over the midterm, obviously the back end will be integrated, right? Whereas the front end will be focused to drive the two brands, right? So that's how the efficiency will play out. I think the front end will be so even at the front end, right? Front end for categories like some of the channels will be common, like e-commerce and all. 1/3 of the business is common, whereas GT infrastructure, right? The front end infrastructure that will be independent for the two brands, right?
So perfect, I get that. And on a broader kitchen appliances stuff, you did mention that the category is under a threat for multiple quarters now. Can you specify any particular categories? Kitchen appliance as a segment is very broad. Any particular categories which you would like to call out, which are working well, and any particular categories which are yet under threat, which you don't see any green shoots?
Yeah, look, we may not be significant player in every part of the kitchen portfolio, but from my understanding, certainly gas stove, mixer grinder, induction cooktop. Till last quarter, hoods was doing well, but I understand even hoods, kitchen hoods and hobs have come under stress. This is what I understand. Yeah? So small domestic appliances, not so sure, but what I understand is even the platforms, the commerce platforms are under stress on the kitchen portfolio, implying even small domestic appliances may also be under pressure. Yeah.
And do you see anything changing in this as a broader category now when government focus is back on to the rural spending socialist reforms? Do you see anything changing for this category after so many quarters of drought?
I think that there may be two factors, right? So one is I think I think people spend a lot of time at home during COVID period, right? And while most categories compressed this COVID period, I think kitchen as a category did exceedingly well. Yeah, and it's quite possible that this has been one factor which is contributed as the category came out of COVID. I think the pressure has come down, right? That the consumer demand has come down. The other thing is, typically, when you look at the overall consumer durable space, right, the most widely penetrated category is kitchen, right? Because you take a product category like, gas stove or, you look at a mixer grinder, these are highly penetrated categories, right? Maybe hoods and built-in is still sitting with, premium, with, let's say, higher income households, right? So it's quite possible that, during the COVID phase and, the post-COVID phase, the household balance sheets have come down, right? And, they've been under stress, and particularly for, I would say, middle class and lower middle class, the stress may have been, aggressive, and it's quite possible that, the households are busy repairing their balance sheets, and, they are only making essential replacements, right? And also, and that's reflected in the, consumption data also, right? I think, yes, there are some positive signs. I think monsoon is extremely favorable. This year monsoon progress it's been on time and it's progressing well, and that should augur well for the rural markets, right? That's one part of it. I think the other part of it is also, right, the budget has talked about a lot of bringing a lot of focus on developing the farm and agri sector. I think that's a very, very positive and promising thing, right? That kind of focus is seen after some time, and it's probably responding to the challenges and stress that this sector is facing. I think this will have positive implication on the midterm, right? Midterm demand, over a 3 to 5 year horizon. So I think these are favorable factors. I think the fiscal deficit is also forecasted to be lower, right? And that should probably keep inflation on the lower side, and which might be a positive for consumption. So this is how it's playing out, and so I think yes, when you look at a midterm horizon, things are looking good, right? Things are looking better for consumption, and hopefully it should reflect in kitchen categories here.
And just on the competitive pressures, if you can comment within this kitchen. No problem.
Could you please fall back in the question queue?
No problem. Thank you.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, thank you for the follow-up. Sir, if Mithun sir can address my question, I had recently concluded exhaustive channel checks pan-India, and the feedback I got from the ground was, while products for Vguard is probably one of the best in terms of quality, we do lack in terms of visibility, especially as we move from down south to northern India. So can you throw some light as to what is our advertising strategy? Are we doing anything specific in terms of addressing the western and northern markets? Specific meaning, onboarding some kind of a bigger or a larger than life iconic celebrity to improve visibility or target the influencer management space. What is our broader strategy here?
Okay. So I'll answer your question, and then maybe I'll ask Ram to pitch in after I do. So as of now, we don't have any plans to get in a celebrity. I think what one has to understand is that We are in a multi-product category, so we have like 7-8 large categories. So the problem of getting a celebrity is, you can only do it for one category usually because they are easily tied up. They will not, because different companies are there, getting. So although you can get a celebrity for a single category, getting it for multi-category, it's usually difficult. And that's what we have faced in the past, and that's one of the reasons. Second is, we really believe that our product work should speak for itself. For example, we have made significant strides in the fan business without having any celebrity, without having any advertisement, solely on the basis of our product work. So I think we are doing similar works in other categories, and they will also, because we believe that you can advertise, but if a product is also not up to the mark, then there is no point in advertising, and that's something we have realized, and that's why we've set up close to 5 to 6 plants for various categories, because it all starts from the manufacturing side. We need the flexibility to do refresh of products faster. We need better quality, which we can only do in our own plants because vendors have a limit. We need fit finish. Design has to be outstanding. Again, this cannot be made with vendors. So those are the reasons why we have invested. So, and we are now starting to see the fruits of that. Regarding advertisement, I think till 2020, I think we were spending between 2.5 to 3% on A&P. And I think during COVID, FY21, 22, 21 and 22, we had cut our A&P. 23 was, we really got impacted through margins. So if you look at the current year, our A&P for Q1 has gone up by some 30-40% in revenue. And it's gone up faster, it's gone up double, it's gone up faster than the revenue. So we are pressing the foot on the accelerator for A&P, and that. But I think you have to keep in mind that, India is a very large country, and, we have diverse markets and language. So I can say for sure that we are having very strong recall and following and preference in southern and eastern markets. Northern and western markets are yet to have the similar kind of, acceptance as when you do your channel checks. But then having said that, if you look at Q1, North has grown by about 25%, Western markets have grown by about 27%, and East has grown by 30%. So they are not that largely different, just to answer your question. Ram, you want to add anything?
Yeah, I will, Mithun. So if you look at, if you look at, Vguard business last year, right? I think, we are, or if you look at our current business, I think, we are trending at about the 2,500 crore, revenues in non-South. And today, which is, quite, under the Vguard franchise I'm talking about, right? 2,500 to 3,000 crore will be our non-South business this year, trending on the Vguard franchise. Yeah. So obviously, we can't build this kind of what I would say business, right, without brand awareness. Yeah, that's the first point. I think yes, I think when people talk about brand awareness, right, so people talk basically about top of mind recall, right? Top of mind recall is so that people instantaneously say, yes, I know this brand, right? So you're really talking about top of mind recall. Okay, I'm sure aided recall will be good. So the problem with top of mind recall is it takes time to build. So let me just go back, right? If you go back to our North-South business, it's not more than 15 years old. Yeah, and if you really look at our presence in non-South, considering that we have staggered our entries into different markets, at a state level or even at a district level. And if you also look at the fact that we have staggered our entry across different categories, broadly, we are a 7-8-year-old brand in most markets, right? In some markets, we are 2-3 years old. Some markets, we are 10-12 years old, right? Depending on, that's our, actually, the breadth and depth of our presence, it's not actually 15 years also. It's like 7 to 8 year old brand. And now, for that size, our awareness is quite decent, right? But we lack top of mind recall. Top of mind recall building, right? It really takes time. Of course, you can get a good celebrity, and you can pump it up, right? But sustaining it will mean also sustaining the spending over a long period of time. Now, as a business, right, we have number of imperatives, right? When it comes to building business, right? The most important thing, that you have to invest is actually to build your capability, right? So, and that's what we have done, right? We are building our, we are investing along the path of doing business, right? We are investing to strengthen our quality. We are investing to strengthen our, what I would say, fit and finish. We are, as Mithun talked about, right? We are actually making very deep investments. And I think, unfortunately, most of our investments are not visible, right? They are not visible because they are all driven towards capability. We believe that, we will, reap the best fruit, right? When, we are really capable and equipped so that, when we invest in significantly in advertising, we are able to reap the fruits of it, right? So I think there is a lot of investment that's happening, investment in service, investment in quality, investment in design, and we are doing that. And today, if you look at Vguard, we are far stronger than who or what we were 5 years back. We are investing in talent, and we are investing in talent for the future of the business also, not only to run the current business. So investments are happening in many areas. Huge investment is happening on technology and digitization. So not all, there are, yes, of course, we could do more on the front end. Yeah. The problem with front end investing is also, right, you have to sustain that investing to build the brand, right? It's not a 1 year effort, but you need to do it over a 3 to 4 year horizon. Unfortunately, we've been passing through a lot of uncertain times, right? With the demon, GST, then COVID, and then the commodity shock, right? So so I think that that's been a bit harder for us to make planned investment, right? Because we are also investing on internal capabilities simultaneously as the business is under stress, right? So internal investments have continued very strongly even during the most difficult phases that most business have gone through. Yeah. And so that's how I would put it. I think we are very much committed to investing in the future of the Vguard brand. It is just not visible in the way that you would typically expect to see, because it is directed in different directions. And the other final point I want to make is you should correlate the brand, whatever you may be sensing, fundamentally coming from a top of mind awareness issue, right? We can't build a 2,500 crore business in 12 to 14 years, right? We can't build this kind of a business, right, without brand awareness, right? I do hope you understand. It's not the absence of brand awareness, it's the absence of top of mind awareness in newer markets where on an average you would be not more than 7 to 8 years old, right?
Sir, that's extremely helpful. Thank you for that. And definitely on the ground, we have seen improvement in terms of quality as well as design. That's all from my side, sir. Thank you and all the best.
Thank you.